Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Yesterday's trading was very robust as we saw all 11 sectors finish higher, with energy leading the way up 2.2%. This is telling us that market participants are very confident about the further recovery of the economy. We also saw several economic reports coming out, and as I've been mentioning, these are all coming in much better than expected. We saw housing prices surge 4%. A few months ago, we would have thought that to be impossible. We'd expected we'd be back in 2008 and 9 when prices were plummeting. So far, the Fed has been successful in engineering a bottom, and the activity that we've seen out of the technicals in the last several days has signaled some major events, and I will cover that in the technicals here in just a minute. Over the next couple of days, the big events are going to be the ADP report, which is expected to show 3.5 million new jobs, and the employment numbers to come out, which is also expected to show similar activity. My expectation, whether they cook the books or whatever they do, these numbers are going to continue to come in better than expected. Even though the ultimate numbers on the unemployment numbers are going to be terrible, market participants are likely to see these as bullish events. The deck seems to be stacked right now for the bulls, in spite of seeing California shut down the beaches, Arizona shutting down certain businesses, and also in Texas. The markets all of a sudden don't care about COVID. Maybe it'll come back into play, but at the moment, this is not what's going on in the market sentiment at this particular moment. It is likely that most market participants aren't going to make any major moves before the employment numbers come out on Thursday morning. Also, we're looking at a long weekend, and historically, this is typically a strong week, and also going into the second week of July has some tendencies to also suggest we're going to see strength going forward. But overall market sentiment has improved substantially over the last two sessions. I expect that we'll see market sentiment continue to get more bullish as we go forward. Let's take a look at the charts, see what they're telling us for Wednesday's action. In tonight's video, we're going to continue to look at the longer term aspects of what's going on in the market. In recent videos, I drew in what I expected to see happen on this long-term chart, and you can see with the update of the new market grid for July, you'll see exactly the pattern that I started to draw in, where we're setting up this broad trading range. We're likely to see this remain in place for the next 2 or 3 months. Now, having said that, we also have a strong possibility of trading up toward the higher end of the grid. And that grid suggests that we could see a minimum of 3280 and the possibilities of going to 3381 to the 3471 levels. In just a few minutes, I'll go through the short-term charts showing you exactly some of the Fibonacci projections that are coming out of this sequence. Now, we still have not confirmed that the pattern will go to these levels, but as you look at the PPMs down below, you'll see that PPM2 is breaking through its first and second derivative. PPM3 remains flat, but up over on the left-hand side. You'll see we're up 0.64. We are 0.60 and 0.38 on PPM1. Now, anything above 0.25 on the price pressure momentum indicators suggests that we're in an uptrend. I talked about this over the last couple months. As we traded through these patterns, the upslope of these patterns suggested that we would get back above and trade within the confines of these moving averages. Some of the key areas that we're going to look at on the downside will be the 30-12 area, which is the 10-month moving average. This would represent somewhat of a retest, the low that we saw over the last couple sessions. As I mentioned, PPM1 is up 0.38, so there's only a 40% probability to move below that level at this time. As you'll see here, S1 is 3,000 exactly. If we did retest these levels, that level should hold. I've talked about the cluster of numbers that are existing in this pattern, and they will continue to be dominant for at least the next 2 to 4 weeks. Now the market grid suggests that if we went to an R1, that would be 3180, and then R2 is now 3280, which suggests that we'd go slightly above the highs that we saw in June at 3220. Now we're looking at the monthly futures contract. But back to the grid, the current grid, we're looking at a minimum move to 3280 and the possibility of going as high as 3380 to the 3471 level. This would also suggest that we would see a retest of the all-time highs. Once again, this configuration is hard to grasp knowing what the backdrop is in the economy, but we're going to find out more in the next couple sessions about the recovery and how things are proceeding. And over the next quarter, we're going to see even more evidence of the recovery. It does not look like to me that this thing is just going to come apart, and we should trade within the confines of this monthly grid. Let's take a look at the short-term charts now and see what they're telling us. As we look at the Fibonacci projections, which are currently suggesting 3394, 3574, and 3685, this is within the action that is likely on the market grid on a monthly chart. However, this new upward projections that I'm talking about have not been confirmed. There's a couple hurdles that we have to get over before we will have a confirmation of this pattern. The first is going to be a close over 3145. Close above that level will indicate a move to retest the 3220 highs that we made several weeks ago, and then ultimately a close over 3220 to confirm this upward pattern that I'm talking about here in these Fibonacci numbers. So there'd be a minimum move to 3394. If we get that, would actually represent a slight new high. Most likely the market would rally between 3394 and 3574. Let's talk about some of the critical numbers underneath this market. We're seeing a negative 0.5% overnight right now, but this is setting up right into the market grid. What we've seen overnight so far, S1 is 3072.25. The low so far has been 3072.75. So we almost have a perfect hit on the S1 number. Now, if that number holds, which I suspect it will, then we're likely to see a move back toward the R1, R2 number, which is 3108 to 3128, is most likely going to be an S1, R2 number. We could surge up into the higher number R3, which would get us close to this breakout number I just discussed at 3145. I don't expect that's going to happen before the unemployment numbers come out on Thursday morning. The weekly market grid suggests that a move to 3113 is likely. We did print 3101 on the futures yesterday. We're likely to see that continue toward that number. And if we get above that number, then the futures are suggesting that R3 would be 3169. So just like I talked about on the downside, there's a cluster of numbers right between the 3140 and the 3170 levels. So that's going to be a major resistance, at least for this week. Depending on how we finish on Thursday, this will tell us a lot about the next couple weeks of action, and we'll wait till that close comes. And on Sunday night, I will go in detail on what my expectations are, but we have 2 more trading sessions, so we're getting a little bit ahead of ourselves to see how this market holds up and what numbers get printed over those next 2 sessions. The next market we'll be looking at is gold, and gold had a nice buy signal at 1728 on June 19th. This pattern is continuing to evolve as we're seeing ppm1 now at a plus 3.8, ppm2 is at a plus 1.9, and ppm3 at a plus 1.5. So we have not got across the board trend, but ppm1 is at a level that suggests we're likely to see substantial support at the 10-period moving average. That number right now is 1774. So any retracement back toward this number between 17 85 down to the 1775 would be a great entry point if it gets there. But the overall pattern is very bullish, and I expect still to see a move toward the 1820 to the 1837 level. Looking at the weekly market grid, you'll see that we've traded above R1. We're now moving toward R2, R3, which is 1807 to 1821, and then the RXT number is 1834. So we're going to continue to move into that level. Depending on how we close on Thursday, this will set the tone for the weekly patterns, but we're still not seeing this robust acceleration on gold just yet, although ppm2 has broken above its first and second derivative, currently at 0.60. ppm3 is 0.41 and ppm1 is 0.34. So across the board on an intermediate level, we have a bullish pattern that's unfolding here in gold, and this suggests that we're going to continue to see for at least the next 2 to 3 weeks prices moving up with a minimum of this 1804 level. Looking at the market grid on the monthly gold, you'll see that R1 is 1834. The next number above that is 1872. I think that's a little ambitious to think that the market will get up there, but somewhere between this 1820, 1834, 1837 level that I've been discussing over the past several sessions is the likely targets for this market. The last market I'm going to cover tonight is Bitcoin, and I'm excited to tell you that we're in the final testing period of bringing in approximately 100 new cryptos into the WaveTech tool. So we're going to have signals on the cryptos. You're going to be able to build portfolios if you sign up for the portfolio manager, being able to run a crypto portfolio in a very dynamic fashion. But as we look at Bitcoin, it's been completely flat for about 5 sessions here. It's been in a very narrow range. You can see that there's a compression that is happening in the market grid right now. Looking at market grid, the range expectations is 89.61 to 92.69. We're currently 91.30, trading below R1. So this is the daily pattern. We're looking at S1 90.95, R1 91.77. There's been a couple trades that have happened here. Back on 4/1, there was a buy at 66.24, and then there was an exit over here at 87.15. It's been out of there. It had a one-day trade where it came in at 95.76 and got blown out the next day at the 90.81 level. So there was a bit of a whipsaw there. Now what's going on, you look at the ppms, they're all negative right now. You get a minus 0.20, minus 0.30, and then a flat on the ppm3. Typically what this means is that we're going to remain in this trading range, and this market will stay within the market grid. As I said, we're going to be bringing this out in the WaveTech tool. We will make an announcement of what cryptos we're going to be covering on the platform, but I will intermittently, I will cover Bitcoin if there's any kind of market activity. This will complete the video for tonight. Thanks again for everybody who was at the WaveTech training. It was an awesome session today talking about the portfolio management system. Thanks again. We'll talk to you tomorrow night.